Hey guys, the question today that I got was, can I trade with $1,000? If I only have $1,000, can I trade? And the answer is kind of. You kind of can trade with $1,000, but you're either going to be hoping for huge price increase, right? So if you've got $1,000, you're very limited in what you can buy, right? So for example, you can look at the chart right now on the screen over here. It's Funko. It's $23.66. 100 shares of that would be $2,300. So you can't even get 100 shares of a company like this. So, like, to do some quick math, like if you had 100 shares of this company, and you can see it's up over here, it's up 81 cents today. If you had 100 shares, your profit would be $81. But you can't afford 100 shares. You would have half. You would have 50. So your profit would be like closer to, say, 40. Not very much money. So you then would be looking for cheaper stocks, which are very volatile, but they're also a lot riskier. What are these cheap stocks? You know what I mean? So what you have to look at is, I wrote it down here because I thought I was going to do this video on my phone, so I got the old trusty paper. If you have less money to trade with, what you're hoping for is cheaper stocks that have bigger swings over the course of the day or days. In other words, you don't have to day trade, right? Like, I think a lot of people have this notion that in order to be in the stock trading game, it has to be day trading. It doesn't have to be day trading. You can swing trade. You can buy on Monday, hold it a day, hold it a couple days, hold it a week. You have more time. Also more volatility. So it's very important that you have your stop losses set up. So I'm going to use a $13 share as an example, because that's what someone was asking me about the other night. So disregard Funko on the screen. I'm just watching it now because I have an order in. Okay, so you have $1,000, and there's a $13 a share company that you're interested in. $1,000 at $13 a share gets you 75 shares. So if it goes up $1, which it might not do in a day, but it might do in a week or two. You bought it at 13, now it's 14, 75 shares times a dollar increase. Your profit is $75, not a lot. But the way I want you to look at it is, when you're trading with a small amount of capital, focus less on the dollar gain and focus more on the percentage gain, because that is an increase of 7.5%, right? The stock going from 13 to 14 with the shares you have is a 7%, almost 8% increase in the stock price. That's very good. $75, not so good. 7.5% gain, though, is a really good trade. So when you have less capital, it's more important that you focus less on how much you're making dollar-wise and how much you're making percentage-wise, because that will give you an idea later on when you have more money. But if you have 1,000, you're not going to be making a whole lot. The better use of your time would be to trade sporadically, a little here and there, but really the goal is to save your money. And also really keep a tight stop loss, because if you only have 1,000, that can get wiped out like this if a stock starts to plummet and it goes down 10%. Now you only have $900. And if you get into another loser and it goes down 10%, now you've only got $800. So keep your stop losses very tight. 5 cents, a couple cents down, not even a full percent, 0.5%. Because the goal for you is to preserve as much capital as possible. So I hope that video was helpful. Please like, please subscribe, and have a good day. Thanks.